Hi, everybody. Thank you for joining us. Today we have Jorge Ganoza, CEO of Fortuna Silver today. Hey, Jorge. How you doing?
How are you, Garrett?
I'm
Thanks
good.
for the opportunity here.
Yeah, it's no problem. It's an exciting time for you guys. We've been following you for some time with San Jose and Cayoma. You purchased Lindero Gold Rock for 100 mil. A few years ago. You've been building. Hopefully adding value. And now you're going to start laying some ore on the heap leach pad, right? This upcoming month in July. So we're excited. We see a big re-rating for you. But before we get into that, I just kind of want to talk about your overall operations. Starting with Cayoma. Where do you see Cayoma at right now?
Even Cayoma we've been able to maintain steady operations in spite of the COVID government-imposed restrictions. Cayoma currently has an extended mine life of 7 to 10 years based on total reserves and resources. It is the first time we see Cayoma with that kind of life of mine projection. Cayoma is a historic producer that traditionally, it's been running for literally 500 years with 3-4 years of mine life every year. So with exploration success a couple of years, we were able to expand that. And the projection in our models today is strong as we ever seen it. Cayoma is contributing more zinc these days. About 50-60% of revenue is coming from zinc these days. Silver is contributing about 25-30% of revenue. We have the ability to shift that and increase the silver contribution by accessing what we call the silver veins in the north, part of the property package. And that's an area where we were mining back in 2010, 2011, when we were seeing the higher silver prices, because those silver veins are narrow, more labor intensive, less productive, but high grade. So when silver prices get at around current levels, $19-20, a bit higher, and we see a steady environment there, we can go back to those veins and start getting our silver output higher.
What's the grade of those veins?
It's a steady producer. Sorry?
What's the grade of those veins?
It ranges around half a kilo of silver.
Oh, really?
Those are high-grade veins, 400, 500 grams silver, but those are narrow veins.
Okay.
So higher cost, more investment required on a per ton or per ounce basis. So we require a higher price environment, but we have that flexibility. If we see a stable price environment in those ranges of prices, we can go back there.
Right.
But for now, the mine is operating steady, no?
Yeah, I see it, as a steady operator, generating a few $1 million every quarter for you guys. But last quarter didn't look like your best quarter as far as profitability in Cayoma.
Could you repeat that, please?
Last quarter didn't look like your best quarter in profitability for Cayoma last quarter.
No, and again, we were impacted by the drop in zinc. Zinc prices dropped, and today zinc is weighing heavily into the economics of the mine. We have seen a bit of a rebound in zinc prices and some optimism in the zinc environment. Overall, on a consolidated basis, zinc is just a small byproduct for the corporation.
Right.
But for this particular mine, today is a big component of revenue.
Right. So your mine plan going forward over the next year, it's going to be status quo, or are you shifting more to the higher grade silver veins?
we are paying close attention to the silver prices
Okay.
because our decision to go back to those higher grade silver zones
Okay.
weighs on price of silver stabilizing at these levels or higher.
Right. Yeah, it's higher. It's so volatile, right? You know, it was close to 19 a few days ago. Now it's off a little bit.
And let's remember that when was it? What was it? February,
Yeah, yeah.
March, end of March, we were
12.
seeing silver below $14.
Yeah,
So
yeah, it's crazy. It's tough managing a company like that, but yeah, over the trend appears to be higher. We're definitely all the Fed stimulus, and we all have our fingers crossed for higher silver prices. San Jose, I noticed that there was a little the mine got shut for a couple days because what was there, a protest regarding the ex-mayor? It didn't have to do with the mine, right?
that was at the beginning of the year. We announced a blockade that was related to a local dispute. The elected mayor, his election has been challenged, and the government of Oaxaca canceled the election results. No, so the mayor and his followers were protesting that, and as means of protest, they blockaded the highway, and basically by blocking the highway, they are blocking also the entrance to the mine and the town and everybody who uses that highway. So we were subject to that for a couple of days. Fortunately, they managed to come to an agreement. We were no part of those discussions, although the government did take a sense of urgency. We are the largest employer in the area and an important activity in Oaxaca. No? So we were glad to see that the government was able to act promptly and managed to reach what we understand is an amicable solution to that issue. No?
So the protest didn't have anything to do with the mine? It just
No.
happened to be on the road that the mine is on?
The protest has to do with the outcome of the municipal elections in the town of San Jose, which is the town, the municipality that hosts the San Jose mine.
Okay, gotcha. How's the surface rights at San Jose? Have you run into any troubles recently regarding access or anything like that?
When we talk about surface rights, we need to understand the bigger picture here. Our mine operations occupy about 120, 150 hectares out of a 60,000 hectare land package. Where we have our infrastructure, operations, and day-to-day activity, all is within these 150 hectares. And we have strong, not only agreements, but strong support from surface rights owners and communities for presence. No, we have no issues there. When we talk about the remaining 60,000 hectares, we find a bit of everything. No. In fact, we are currently in the process of reducing areas because, as you know, and perhaps for your viewers, in Mexico, when the government owns the subsurface, so the government grants you a concession for the subsurface. That has nothing to do with the surface rights. The surface owners. So you have to reach individual agreements with surface owners to access those properties where you want to carry work.
All the ejidos, right?
It might be ejidos, private land. There is, as you can imagine, on 60,000 hectares, you find a bit of everything. So after so many years, we have a clear map of areas, surface right owners where we have ejidos, private owners that are supportive to our presence, and there are other areas that just don't. So we are this year in the process of just dropping the concessions where the communities have expressed through the years consistent negatives to us conducting activities in their surface rights, and we respect that. No, I have nothing to say against that. We are trying to establish ourselves as a positive force in the area, and if there is a surface rights property owner, be an ejido or an individual who does not want exploration activity or a mining company like that on their property, we respect that, absolutely. And so we are dropping of the 60,000 hectare package, just to give you a sense, probably about 25,000 hectares. So that 60,000 hectare package is going to be reduced, and it's going to reflect the surface rights that are more supportive to our activities in the area.
Now, what are the drawbacks of not having access to some of the surface rights? It's only respective to drilling, right, and exploration. But you can do drifts and do that underground anyway, can't you?
Can I what? Sorry.
You can do it underground. You can do it through drifts underground. You don't even need access to the surface.
It depends, no? For example, in the areas where we have active infrastructure, which is this small 100 hectare, no? As I said, we have access to everything we need. And in some areas, we can do the work underground. But on a larger land package that covers tens of kilometers on surface around us, if a surface owner does not want to provide access to the company to carry prospecting, exploration, or develop infrastructure, we respect that very much. And we've been holding those concessions with the expectation that we can present a better case for our work with those owners. But in the instances where we believe we have exhausted our best arguments, and we're deciding to drop those concessions, respecting the fact that surface rights, the owners of the surface rights, just don't want any mining activity in their land.
That's not going to affect you guys at San Jose, because you guys have a large ore body there. And you access it underground, and you drill for the production and a little bit of reserves and resources.
As I said, I think it's important, Garrett, to understand that all of our mining infrastructure, reserves, resources for the next years or life of mines reside on only 150 hectares of a 60,000 hectare land package. So dropping 25,000 hectares does nothing to the prospectivity or prospects or exploration prospect. In fact, some of these concessions, you do blanket concessions. No? When you place concessions, you blanket an area. Some of these concessions cover suburban areas. So we're just, reducing and cleaning the property package.
Okay, so my next question regarding San Jose is exploration, in life of mine, reserves and resources. What are your main areas that you're targeting, and where does that stand?
Today, our main prospects. First, we have been trying different things, sometimes with a lot of success on the exploration front, that were like the one we enjoyed a few years back, which led to the expansion of the mine to what is today probably one of the 12, 13 largest primary silver producers in the world.
It's Trinidad, right?
Trinidad, yes. That was a very important discovery for the company that thrusted the San Jose mine into the ranks of the more important primary silver producers in the world. And since then, we have had mixed results with exploration, and as is usually the case, you're not discovering world-class deposits every day in this business. So today, our exploration is focused on an area called Upper Trinidad North. We're drilling it from the underground. It's an area that has not received exploration before. It's close to underground infrastructure. We have it's bounding some of our existing inferred resources today. So it's like an upper extension of mineralization to the north of the ore body. That's an exploration priority for the remainder of the year. And we have generated other targets on surface. We drill test some of them at the beginning of the year before COVID restrictions set in. We are very active on the exploration front and always generating new ideas. And we have the areas to do a lot of the work that we require. No? We have access to the areas where we're doing a lot of.
So are you hoping to grow resources in the future? And what's the life of mine there right now based on the resources and reserves?
Based on resources and reserves, we're currently looking at 4 or 5 years.
Uh-huh.
That's what we currently have in our books, piling everything we have. And, this is like, this business is like riding a bicycle. You have to pedal your bicycle, otherwise you fall to the ground. And we're exploring every day, trying to find more, replenish, deal with depletion, and hopefully hit a big one.
Right. You guys, you don't even spend that much on exploration every year, do you? Yeah, it's not a focus.
It is a focus, okay, but it is surgical work. Okay. Here you have to do exploration, surgically. It's not just massive drilling, popping holes everywhere. No, we identify targets and we do very focused work. This is not a deposit that favors just a massive blanket drilling like you would do in a porphyry environment or a large disseminated type style deposit. These are veins in structural traps. So it's more surgical work. So the budgets don't require to be huge. It's not a matter of money. It's a matter of identifying the right one, and we do pay a lot of attention to that. We're bringing new ideas to our exploration all the time, improving structural models, geophysics, thinking outside the box and trying new ideas that have not been tested. So that's just part of the ongoing process.
Right. In San Jose, it's never had a real long life of mine, and it just keeps getting extended every year also, right?
When we opened the mine back in 2011, we had a 5-year mine life.
Right.
No? And it was a smaller mine. Right. So we have been able to grow it, and 10 years later almost, we still have 5-year mine.
Right.
So that speaks of...
Yep. The duration of it. So, now the fun part, Lindero. You guys, I guess, COVID interrupted it. You have workers back on property right now. Your recent press release, you said you're going to be stacking, some ore on the leach pad starting July. It's going to be rough ore. It's not going to be crushed. Is that correct? Or crushed through, one of the crushers, yeah.
Yes. We tried to put a very comprehensive news release on what our plans are. Because we have had to accommodate to the new COVID reality imposed on all of us. And that's particularly sensitive for a construction project. First, the mobilization. We have concluded with the mobilization of the workforce for construction. We're back on the project with 460 people. But we are having to comply with new sanitary limitations or restrictions that impose limitations. No? One of them is the amount of people we can have in the camp. Before COVID, on March 19th, we had a workforce of 900 construction workers on site. And we're having to go back with half of that, no, because of distancing and other restrictions in the mess hall and whatnot. So what our team has done is said, how can I still meet our deadlines? No, I mean, we need to accommodate the plan so we can see ore in the pad and gold production sooner. So how do we adjust that plan? So we have less people. So how do we rearrange all of this to still achieve our objectives? And another limitation is there are two main limitations. One is the amount of people on site. And second, Garrett, is that the borders of the country are closed. And we require some foreign vendor support for some equipment. So we have identified which of those equipments are the critical ones. And we identify that the tertiary crusher and agglomeration are the equipment that present, let's say, a higher risk of commissioning, because those equipment are more complex and require stronger foreign vendor support. That now will have to take place on a webcam instead of on site, right? So what we've done is we have removed from the initial production circuit those two components, tertiary crushing and agglomeration. No?
And agglomerate, yeah.
Yeah, so we are going to start mining, running the ore through the primary crusher, secondary crusher, and from there we will bypass these other two circuits, tertiary and agglomeration. And from the secondary, we will go directly to the leach pad. We plan to initiate a stacking of ore on the leach pad this month of June. Towards the end of this month, we should be, according to our schedule, we should start stacking of secondary crushed ore in the leach pad. And we
Go ahead.
We expect. Go ahead.
What's the recovery on the?
That's the trade-off.
Yeah.
That is the trade-off, because the ore is sensitive to the recovery. Metallurgical recovery is sensitive to fragment size, to particle size. So our recoveries with the tertiary crusher are expected to be in the high 70s, no, 78, 80%. With secondary crushed ore, our recovery is going to go down to 50%, right? So this can only be a temporary measure, no? And we expect this will affect us from July, when we start stacking ore, no, June, July, through November. No?
Why did you do this? Just to start getting some cash flow and getting, the business moving?
Absolutely. Absolutely. I mean, we expect we are giving ourselves commissioning the HPER and the agglomeration, so commissioning the tertiary and agglomeration with on-site support is something that we can do in 2 to 3 weeks. We are giving ourselves 4 months to do that now.
Okay.
Because it will have to be done with remote assistance.
With the HPGR, the high pressure grinding roll needs,
yes.
That's foreign. What about
so
the ADR?
The construction is done, the construction is concluded, the installation is concluded, the pre-commissioning of that equipment is concluded, but still we need to run it with ore and adjust it. So that should take, with on-site support is something we estimate can take 2 to 3 weeks. But as we're going to be, just to give you a bit more color, Garrett, the technician for the HPER is a German who lives in Turkey. So I don't know when I'm going to be able to get that German guy living in Istanbul, back in Salta, Argentina, with the current COVID limitations.
Right.
So we have developed a plan with him and the company and the manufacturer. We have developed a plan to get remote assistance for the commissioning. And again, the equipment is installed. You can see the pictures in our website. The equipment has been pre-commissioned, but now it has to be integrated into the production circuit. That is part of the commissioning phase. And we're giving ourselves 4 months, plenty of time to do that, by bypassing that part of the circuit. So we are going to be placing ore in the leach pad starting in June for a period of 4 months. What's the compromise? Lower recoveries for 4 months. And then after 4 months, hopefully shorter than that. I think there are opportunities to make that period of time shorter. But worst case, back in November, the HPER is coming in line, and then we just go back to original design, right?
What are you going to do with your spent ore from the leach pad?
With the what, sorry?
What are you going to do with your spent ore from the leach pad? Are you going to stockpile it and process it later again?
The ore that we have currently on stockpile?
The ore that is you're going to leach, that you're only going to get 50% recoveries from.
That ore sits at the bottom of the pile and will receive cyanide solution for the next 15 years. So ultimately, we would expect that recovery over time is higher than 50%.
Okay.
In our feasibility study, you can see that when we crush finer with the use of the HPER, or recoveries in 90 days, we can achieve 80% recovery. So here in 90 days, we will only be achieving 50% recovery.
Okay.
But again, the world doesn't stop at day 90. That ore will sit on the pile and gets, as it is in the very bottom of the pile, will receive cyanide solution flow for the next 15 years at least. And we would expect that ultimately, for that ore, we'll get higher recoveries. Nothing like we would if we had crushed it finer.
Right.
But it is only 4 months of production for a mine that will operate for 15 years.
Right.
So we don't see it as material, and I think the company would benefit significantly by starting to get cash flows in the fourth quarter of this year, generating positive cash flows in the fourth quarter of this year.
Right. Yeah. You know, a lot of mining companies, you know, they have production plans and projects that are, you know, planned for the next year or so. The market doesn't give them any value for them until the, you know, revenue and profit start sinking to the bottom line. So, you know, I think it's good that you're doing that. It'll help the stock move forward. What about the ADR and the SART plant?
The ADR and the SART plant are still on the final stages of construction. No, so we are in a position to start stacking ore and creating enough surface area for irrigation while we are completing the construction and commissioning activities for pre-commissioning activities for the ponds, ADR, and SART. We are on the overall project construction. We are 94% concluded with this. We still have 6% to go, and that remaining 6% resides in basically ADR, SART, and ponds. What we are doing there is mainly completing piping and electrical installation. All mechanical installations are done, and it's just piping work and electrical.
Okay. That'll be good to finish up. That will, once you're able to process it, that'll bring it up to the 80% recovery, right?
I mean, those three circuits are key for gold production, not just recovery. We cannot produce gold if we don't have the ponds area pumping system operational. and if we do not have the ADR. The SART is not critical for initial production, but you cannot produce gold if you don't have the ADR. So our work is aimed to prioritize completing the ADR. So all of our resources, and here you start perhaps better understanding what we're doing with the smaller workforce that we have. Instead of devoting right now resources to the HPGR and agglomeration, we're ensuring that the ADR and ponds have all the manpower that they require to complete as soon as possible, so we can be producing gold in September of this year. No? Initial gold has to be in September, October of this year.
Right, and you're expecting 25,000 ounces this year, and how many in 2021? You still expecting 150,000 if you get everything up and running?
It's in that range.
Okay.
140, 150,000 ounces.
Okay.
Initial 12 months production.
And you're still looking at the same cost. Well, your costs are going to be different initially, but then they should start settling down because your costs are extremely low at Lindero, below $600.
Yes, as you can imagine, in the initial months, costs are all over the place, right? Yeah. As you are balancing your circuits, but we right now do not see a deviation out of our guided costs in the feasibility. We do not see anything that suggests a deviation.
Okay. Well, how's Arizara as far as exploration is going?
We have stopped all exploration activities so we can focus our resources on construction, which is the value driver for us in the short, medium term. No? Once we have the construction of San Jose and operations, and we're delivering the ounces that our shareholders want to see, we'll go back to exploration in Arizara.
So in 2020, I show you producing about 112 million of free cash flow to the firm. Now, the free cash flow to the firm, it's different from traditional free cash. The way that I analyze the companies is I look at the free cash generated from the mines before any corporate overhead. And the reason I do this is because I want to identify the mines that are the most profitable, because they represent a tremendous opportunity for another miner to come in, take over that mine, strip out all the excess corporate overhead, and they're left with that cash cow. So that's the reason why I do it that way. My free cash flow to the firm numbers are higher than free cash, but I show you doing about 112 mil in 2020. But in 2021, it jumps to 276 mil because Lindero kicks in 150,000 ounces to produce about 173 mil of free cash flow to the firm. Now, the average silver miner trades at 10x free cash flow to the firm. That gives you a $2.7 billion valuation. You're only traded at 941 mil right now. That future valuation is 3x your current price. And what I've noticed, the company Alicer, right, that just merged with SSR Mining, just recently, they had the Copper development project. It was big, and everyone knew it was going to be big, and everyone knew it was going to be tremendously profitable. But Alicer stock did not move until the production and revenue started sinking to the bottom line at the beginning of 2019, and it went up 5x. So, bottom line, I see you guys at the cusp of a re-rating as your EBITDA and free cash flow increases, as you start proving it out. And I'm glad that you are putting ore in the leach pad right now to move the project forward to start that process.
Yes, and we have been doing for the past 2 years something that was not very popular, which is building a mine. I've been in the business long enough to know that you have to be counter-cyclical in this industry. Again, when we made the decision to acquire, we acquired 2 million ounces of gold in total resources. We permitted with an approved environmental impact study for $100 million. No? $50 per ounce for a deposit with a feasibility study and main permits in place.
What was it? 100 mil you paid for Gold Rock, right?
Yes.
Yeah.
Yes. So, and then we decided to build it, which was very unpopular because now we are all crazy about the start of this bull market in gold. But 2 years ago, investors had forgotten the mining equities, and the few brave ones that were in were so risk averse that they didn't want capital expenditures.
Right.
They want everybody to be overly conservative. We are conservative, but I think being conservative is building a mine when you can find the right engineers to build a mine, where you can find the contractors, when you don't have to wait silly amounts of time to get delivery on a crusher, when you don't have to fight with bigger companies to get tires for your trucks.
Yeah.
That's being conservative in this industry, right? So we've been doing something that was not very popular.
Right.
Sorry, but it's working because now as we are concluding with the construction, everybody wants production.
Right.
So we are literally weeks away, because you can count it in weeks, from the start delivering gold.
Right.
In a rising price environment. So I think it's a strong validation for our strategy. How could this story be understood if today we would be saying, it's only now that we're going to start building a mine. So now you have to wait for me 2 years, 2.5, perhaps 3. No? So no. I think we made the right decisions. And you're right. We need to, in a few weeks, we're going to be delivering gold. And that should allow the company to get an important re-rating based on our multiples over EBITDA or free cash flow generation, however you want to estimate that. Right? Yep. We're going to take our production. We currently produce 40 to 50,000 ounces of gold every year, and we're going to take that production to close to 200,000 ounces.
Yep, it's a huge jump.
With low cost.
And more than doubles your company. To play devil's advocate, what about some of the discount relating to Argentina?
Well, I always say that mining is a frontier business, right? It was for the old timers, and it is for us as well. So Argentina is currently in the final stages of negotiations for the restructuring of their credits with bondholders and the IMF. I think it's been a tortuous path, but I believe they are coming to the end of that. And if you read in the news the information that's being published by the different authors of this evolving story, or actors of this evolving story, I think they're going to come to an agreement. I think they're very close. We still need to see that happen, but I think we're getting there. And we also hear positive messages from the authorities saying that what they're trying to do is balance short-term pressures imposed by COVID and the impact of that on the economy, and this restructuring with the bondholders and the IMF, but not losing sight of what the country needs in terms of growth. So even though there are restrictions imposed on access, on exchange rate and things like that do hurt us in the short term, we also hear from them that they acknowledge that these limitations are short term, are transitory. And again, I think it's paramount that we see the outcome, the final outcome of the negotiation, and then start seeing how the government starts creating the environment that the IMF, bondholders, and the country demands, right, from the government, no? An environment that's suitable for foreign direct investment and get the country back in a path for growth. Today, the policies that have been implemented are short-term to avoid the collapse of the local currency. They are in a distressed situation, no doubt, so although I do not share some of these actions, I understand them as well, right? But we need to see a change. Today, our business today is not impacted by any of these measures. As we understand them, and it's in the law, they are transitory. But no, we need to see what happens with the outcome of that negotiation, I think.
When you say transitory, you're referring to what, the capital controls and stuff like that, right?
Capital controls, for example, if you want to pay dividends, you need to access the dollars to repatriate the dividends. And there is a discretionary process there and things like that no one likes, obviously. So that has been recently imposed as a transitory measure for a month, no? And again, why for a month? Because when we speak with the authorities, they're saying, hey, listen, we need to preserve our treasury, or dollars in the treasury, and we just need the negotiation to get concluded. And again, hey, listen, Argentina is not for the faint of heart. No, we never claimed that. But
right. What? So you're going to be able to take out your capital, capex invested in the project, right? From Argentina. Does that include the price that you paid for Gold Rock? So it's going to be 450 mil you can take out before anything being subject to capital controls if the rules don't change.
Today we can repatriate, we can service debt, and we can repatriate. There is no limitations on repatriation. There are no limitations on repatriation of capital. The limitation is at what price you can access the official rate. No, and there are no limitations on servicing debt, or there are no limitations on servicing dividend payments. Just to be clear, because there can be confusion in the detail of how we explain things. The limitation is imposed on the access to the dollars. There are different dollar rates you can access. So the more convenient rate is the official rate, and the government is indicating that they're working to close the gap. No, they understand that they need to close the gap between the official rate and the parallel markets.
Blue market.
Yeah, and not only the blue, there are like 3 other markets for the dollar in Argentina. The blue is like, they call it blue, but it's really a black market.
Okay.
Right? So we wouldn't access that market. That's usually what individuals access,
right.
No, for smaller amounts.
Yeah, you got a little bit more money.
But there are other 2 other markets that we can access. But there is a gap between the price you can access in those markets and the official market.
Right.
So the question right now, because a gap has been created over the last months, is what market can you access? And that's the entire situation that a distorted economy creates. And we didn't see this a few months back. This is something that has been created as a result of the evident default. So we need to see the default negotiations closed, the negotiations on the restructuring of the debt, and then assess the measures that the government takes, because it's clear to the government that it will be impossible to attract foreign direct investment with these kind of limitations.
Right.
I mean, I think you don't have to explain that to them. They understand it very well.
Right. Where does the currency conversion come in, right? Could you just, regarding the logistics of, your process, you're generating doré bars, you're shipping them off to the smelter, you're getting paid in US dollars, right?
Yes.
And then where does the Argentinian...
You have to, the product of your sales comes into the country, gets converted to pesos. no, to the local currency. And then you have to access dollars back again to import cyanide, to pay for equipment that you need to, for capital goods,
Right.
for consumable goods, services that you pay for outside of the country.
Mm-hmm.
So that's just for your working capital, operational day-to-day needs. And second is if you want to service debt with foreign institutions or you want to pay a dividend, you have to access the dollars. Right?
Mm.
And how does that happen? Before, up to a few months ago, this was a non-issue. There were no restrictions. But as they got closer and closer to the dates of the negotiation, on the restructuring of the debt, those rates have opened up significantly and creates a material distortion that is not sustainable. Right?
So what sort of benefits is Fortuna seeing from the decline of the Argentinian peso? Are you seeing cost savings?
Yes, absolutely. We're benefiting. We've been benefiting at times for as much as $500,000 a year. But let's keep in a month. I'm sorry, $500,000 a month. But even though there is a short-term benefit from the strong devaluation of the local currency, when these imbalances take place in such a magnitude, there is no free lunch.
Mm.
And what we're seeing right now, and we were just talking about the restrictions imposed on accessing dollars and whatnot, that is the trade-off. You might see that you are a winner because you're the devaluation, but when the devaluations are so large, it creates imbalances and it comes back to bite you. And we have plenty of history in Latin America to understand how that happens. And that is what's happening now, right? Yes, we're benefiting short-term, but that's a type of benefit I wouldn't like to have because it's creating problems when I go back to access the dollars that I need, right? So when I come in with dollars into the country, I have more purchasing power.
Mm-hmm.
But when I have to buy with pesos the dollars I need to service my imports or to pay debt, it also creating problems, right?
Right.
So I rather have a stable economy than one when I'm making money on the short term with the exchange rate as an exporter.
Yeah.
When the movements are minor, yes, it's beneficial and we're like it.
Right.
Well,
that would lead me to ask, out of all, when you guys bought the project, out of all the projects out there, you chose Argentina, right? And Argentina wasn't doing great back then.
Argentina was not doing or was doing?
Was not doing great back then.
When we bought into Argentina, Argentina was going through a phase of change.
Uh-huh.
We're adjusting some of the imbalances that we're just talking about right now, right? They were trying to implement change to make the country more appealing to foreign direct investment. No? Yeah.
Right.
But we assessed other jurisdictions. And I can share with you that we were assessing projects in Western Africa, for example.
Yeah.
Some very intriguing projects. It is too bad the countries that we were looking at right now are plagued with jihadists. So I'm not sure who's worse, the jihadists or the economic imbalance.
Yeah.
Right? So as I say, mining is a frontier business. Look at Mexico today, Mexico under the presidency of López Obrador is becoming a different place for business than it used to be.
Mm-hmm.
And I don't think you can find anyone who will tell you the contrary with a serious face.
Mm-hmm.
Mexico has become a much more challenging place. In Peru, although we're seeing a couple of large new projects being developed, like Quellaveco with Anglo American and Mina Justa with a local group.
Mm-hmm.
There are also projects that have stalled because of lack of government support. So it's a pendulum. It swings one side and swings the other.
Okay.
It's difficult because mining is a long-term investment.
Mm-hmm.
But that's the reality of not only the region, I believe today, the world.
Right, no doubt. Okay, Jorge, is there anything else you'd like to speak about today?
No, I think we touched on the main points, Garrett. I think the big catalyst is Lindero, and we're very positive on where we are and with a lot of expectation.
Right. That's good. We're excited. We're looking forward to. We're going to be watching it closely. Keep an eye on that cash.
Okay.
Good, Jorge. Thank you very much for joining us.